All right. Well, thank you for joining us. I'm Roni Haskell. I'm a agent, licensed real estate broker, actually, here at Keller Williams Real Estate, helping people buy, sell, and invest in the Low Country, the coastal region of Charleston, South Carolina. Proud to lead a team of agents who I think are the top one. Well, we are in the top 1%. I think they're the best team in the area, and I get to partner with companies and have business relationships with companies like Farm Bureau Insurance. So, Tim, thanks for joining us.
Thank you so much for having me, Ryan. I'm glad to be here today.
Well, you are a strong advocate for our clients and for me. I mean, it really is a partnership. I can't do what I do every day without relying on my business partners like yourself to help answer questions, help guide us. I sell real estate, but once they have purchased it, they got to make sure that they're insured. And you and I have been through a lot of conversations over the years to make sure that people are insured. Even some of your current, recently, you reached out to me just to see what building costs were in this area, so that current clients of yours, current customers of Farm Bureau, would make sure that they were not underinsured if they had a catastrophe, if they had to rebuild. So there's some
That's
mutual benefits to having business partnerships like this, and insurance is a big part to it. I don't care if you're financing it, you're required to have it, or if you're buying cash and you just absolutely see the need in protecting your investment. So appreciate you coming on today. You are going to be talking about the things to know about insurance in the Low Country.
Absolutely. The coast is a little different animal from the Midlands or the upstate, and that's true in any state where you have the chance for named storms, tropical storms, hurricanes. Things are a little different here than others. There's a lot of companies that kind of come and go in coastal regions, and we'll hit on that a little bit. We're going to talk some about inflation, flood insurance, just going to try to hit the 5 things that I think are most important for folks to understand when they're buying a home down here.
Yeah, so this is kind of consolidated, trying to get a lot of content in. If you have any questions at all, reach out to either one of us after the fact, and we'll make sure that your questions are answered. And if you need a great advisor in insurance or in real estate, reach out to us. All right, Tim, go ahead and screen share. You got a fantastic presentation to help kind of guide the conversation. And I'll let you go ahead and start that presentation. And it'll also have our contact information on it, so that way if anybody needs to reach out, they can. All right, I trust that everybody can see this. If you have any questions, again, raise your hand. There's a little icon down at the bottom with a raise hand. And if you have any questions, there is a message box down below as well, where you can drop, it's a chat box. You can drop any questions into that. And at the end, we'll make sure that your questions get answered. All right, Tim, floor is yours.
Okay. Let's start with number 1, basic homeowner coverage. So when you're buying a home policy, there's a lot of things about coverage people don't understand. I have questions come like, well, a tree fell in my yard. Are y'all going to take care of that? Well, it didn't hit your house. It's not a yard policy. It's a home policy. We're going to protect the home for things like fire, theft, windstorms, hail damage, busted pipes, just things like that. It also provides liability coverage for you in the event that, let's say you have a rotten step, somebody falls through, breaks a hip, and they file suit. So we want to provide some liability coverage for something that you're liable for in the event of a claim of that nature. If you have a mortgage, you are required to carry home insurance. I'm sure everyone knows that. It is optional if you pay cash. However, beware, if you have a total fire loss or total wind loss, there will be no recouping what you've invested. So I would advise everyone to have home insurance. And a standard homeowner policy covers pretty much anything other than a few minor things like earthquake. That's not covered on the basic home policy. You can definitely purchase this coverage as an endorsement. And also flood insurance. Any water that enters the home from ground level, that's a flood. That is not covered on home insurance. There's a national flood insurance program through FEMA that you can purchase home flood insurance for your home through, and all agents can sell this stuff through FEMA, and it'll be on the whatever paper of the company they write you through. Then we'll get more into flood insurance towards the end of the presentation. There's also some limitations on things in your home. Like most companies give you 50 to 70% coverage for your personal property in your home. However, high value items, and this almost 100% comes down to jewelry and in the South, gun collections. So those things could be insured separately through something called a personal article floater or a personal property floater. Very inexpensive, and it's actually a little bit better coverage in most cases than if they were, say, lost in a fire in the home. So just good basic things to know there. Here's something that you've not heard of if you're moving to the coast. Percent deductibles. What does that mean? In the event of a named storm, wind, hail, depending on the deductible package that your company offers, you can have a percent deductible anywhere from 1 to 10% of the home's value. Some people think, oh, I have a 5% deductible. That means that I have to pay 5% of the claim. That's not true. If you have a $500,000 home, 5% deductible means you're out $25,000. That's usually more than the roof cost. So we want people to understand percent deductibles and make good decisions. And visiting with whatever agent you're doing business with and go into details there is a very good idea. The deductible usually applies per event. So if you have Hurricane Roger and have a claim, and then we turn around and have Hurricane Sally a month later, you're going to pay that deductible once more. So higher deductibles can lower the cost of the policy, but a lot of times it's not enough to make up for the difference of another $5,000 or $10,000 out of your pocket during a claim. So I want to try to keep those as low as we can. Some companies have a named storm deductible. Some companies have a wind and hail deductible. Big difference. We had a storm, Roni, a week or so ago, and we had a lot of hail damage. We had a microburst in excess of 60 miles an hour, and we had a lot of damage here. Companies with a named storm deductible, you would not pay the percent. You'd pay your base deductible, $1,000, $2,500, whatever. But companies who have a wind and hail deductible, those folks are out 1 to 10%, depending on what deductible they chose. And it can get very, very costly just for having some hail damage to your siding and maybe a limb, done some damage to the roof or something. So I just want to iterate that you need to be very careful with these percent deductibles. The third big one on everybody's mind right now, and every company is dealing with this, is inflation. Home rates are up about 11% this year over last year. A lot of these numbers here are from 2023's numbers, but they're even up more this year. Big thing about this is your eggs and gas and mortgage and everything else is higher than mortgage rates are higher than they were. So are things like labor, shingles, doors, windows, everything is higher. This affects insurance companies because we usually set rates about once a year. And by the time that everyone pays their premium, we're into 2 years from the rate change. So basically after 2 years, we know, have we collected enough premium? Well, by then we've had another 20 to 35% cost in, goods and services. So we're behind the 8 ball again. And this is what's been happening for quite a while. We have storms all over the Southeast, and you don't think, well, why did my rate go up? Because they had a hurricane in Louisiana. Hurricane Irma 4 years ago now did horrific damage to the Louisiana coast, and that affected rates here. There's something called reinsurance, where companies will have a deductible like you have your deductible for a storm. Let's say our deductible is $5 million. once we've paid our $5 million, and it goes to the reinsurance company and they cover the rest of the storm. If it's a $150 million storm or a $400 million storm, they've paid out a lot of money. So in reinsurance, rates have surged. I think the slide says 37% increase, the highest in 30 years. That was last year. So this is affecting our rates as well. Also,
go ahead. Well, just one thing to note on the rates rising, I was just online earlier paying one of my rental properties deductibles, renewals. And last year it was $1,500. This year it's a little over $1,800. And, I actually have restructured my rentals with all my tenants and had to go up in my rates because of that. So investors are being hit with this as we're having to absorb that extra increase in the rates and passing it on to our tenants. And so just if you are an investor, my take is make sure you revisit what your, overall costs are and putting that into an account for what your renters are paying as well. I mean, we're seeing rental rates increase just like property rates are increasing, but you just have to explain it, is my insurance went up $300 and there's a reason why that happened. But yeah, I mean, and property values are going up as well. And so you may be hitting on this later, Tim, but just, if our property values went up 20% over the last 3 years, then we need to take into account, maybe there needs to be some kind of adjustment on our insurance as well. So
Sure,
it's, the property values continue to elevate, the cost of construction continues to elevate. And so many of us are sitting in the same kind of policies at the same monetary amounts as when we bought the house 5, 6, 10 years ago. And it's a good idea to revisit the cost and how much coverage you have.
Certainly. And with most quality companies that provide homeowners insurance, there is an inflation protection clause in that policy. Ours have that. So we keep up with the cost to rebuild in each zip code in the state. And so we're going to add coverage as need be. But sometimes, let's say it went up 28%. Well, we don't want to pass on a 28% insurance to value increase on our clients. So we may take 14. That means you're, 14% too low still. So anytime that the coverage, you feel like your coverage is too low, get with your agent and let them run a replacement cost estimator. And
well, I was very guilty. A lot of my early years in buying real estate, I was very guilty of wanting the lowest premium possible, and sometimes often underinsured in that. And as I've learned more about insurance and protecting my assets, I'm much more inclined to make sure to ensure that I am fully covered if anything happens to either the property or the people that are in it. So anyway, a plug there to revisit that every once in a while, but take it from here.
Well, another thing you mentioned, investors and having to pass those increases on to their tenants. One thing to do too, not just to make sure your coverage is correct, but I increased my deductible this year. My homeowner's policy went up $500 and I had $1,000 base deductible, which has nothing to do with the storm. This is if my TV gets struck by lightning or I have a busted pipe in the home or something like that. I'm not going to file a claim at $1,000. I looked at the difference. It saved me $500, the entire increase, by going to a $2,500 deductible from $1,000. Okay, well, I'm out $1,500. Well, in 3 years without a claim, I'm money ahead. So again, having an agent that you've got a relationship with, that you can call and talk to, go over things, everything in the policy, and usually, they're able to pretty quickly, pull it up and check some changes and go from there. But that might be one way not to increase rent for you and your investors right now, is maybe raise it up a little bit if it's a little too low and you could stand a little bit more. It could be some significant savings. So another thing to think about. Also, homes are technologically changing. We didn't have power blinds and things like this years and years ago. So when your home is damaged or totaled, the company has to replace those technologically advanced systems as well. In-home vacuum, vacuum in every room, hot water heaters that are the external, the ones in the external house. Those are more expensive than the standard tanks. So a lot of that kind of stuff goes into reconstruction costs too. And I think it's something that a lot of people don't think about. So nobody likes rates going up on insurance, but you're right. When you're underinsured, after the claim is a terrible time to find out.
Yes. And I have had a client who has had a home, a total disaster, a total loss. And watching somebody that is underinsured go through just the exposure of having to make hard decisions after, that complete loss has happened and not having enough money from insurance to cover everything for a replacement. It's a hard thing to watch the family go through. So it really is to make sure that you're at least, if you're underinsured, at least you know it and you've got means to support a reconstruction so that you're not at a complete loss.
Right. Yep.
It can be debilitating.
One more thing on rising costs. So before the pandemic, average home's roof was $6,000 or $7,000. Now they're $17,000 to $25,000. Huge changes. One thing I want your clients to know is that these national roofing companies, I'm not calling any names and I'm not giving you my opinion, I'm giving you facts. They will have you sign a preliminary contract. When you sign that preliminary contract, you have given up the rights to negotiate with your insurance company. You've given it to them. I personally do business with local roofing companies because of this, and I see how it impacts our industry. 50% of all claims paid by a homeowner company are for roofs. I mean, it's the most common cause of loss. So I would encourage everyone to call your claim into your company. Right now, we just had a storm, like we mentioned earlier, and there's a lot of folks going around knocking on doors asking if they can check their roof. Please don't let them do that. Please don't sign anything. Call your insurance company. Have your licensed adjuster come out and check the roof. These architectural shingles, Ronnie, they'll withstand dime size hail, no problem. It'll knock a little gravel off, but it's not going to cause that roof to leak. A 3-tab shingle, the roofs that look very flat, those won't stand up very well to hail, but these architectural shingles do really well with them. Basically, if you've got a dent in your car from hail, you probably got a problem with your roof. But I just want people to be cautious when they're contacted by national roofing companies that contract can really cause you and your insurance company some problems getting your claim handled quickly and without litigation.
So the message to that is if you suspect there is any issues, start the conversation with the insurance company. Absolutely. and then get quoted out, or let the adjuster guide you through the next steps.
Sure.
For getting
most companies will not require you to use certain roofing companies. We just don't do that. You can still choose your own roofing company, but you maintain the right to negotiate on your behalf with your company if you call them first before you sign anything.
That's a huge message. Thank you for making us aware of that. I don't think that, well, clearly, if you're bringing it up, you're seeing that it's a real problem in our area. So thank you for making us aware of that.
It's becoming a bigger and bigger problem all the time, unfortunately.
Yep.
All right. So the current market conditions here, you keep up with current market conditions in real estate, and we keep up with current market conditions for insurance. So I put a list here, just kind of eye-opening for everyone to see just how many companies have gone insolvent or bankrupt just in the last couple of years. So one major one was Southern Fidelity Insurance Company. Folks from here know about that. It was on the news. Major company, been in business longer than I have, and this is my 25th year. Hurricane Irma in Louisiana cost them more than they could pay, and reinsurance covered the rest, but their reinsurance rates went up so high they didn't have the capital to buy reinsurance. And so when they couldn't fill their reinsurance tower, the Department of Insurance in Florida and a judge shut them down, and they became insolvent. All these other companies listed here also were insolvent on those dates at the far right of each name. Luckily, with Southern Fidelity, they participated in the South Carolina Guarantee Association, where insurance companies pay in a premium just in case something like this happens. So everyone whose mortgage was paid either by themselves or their mortgage company that year, they were refunded the unearned premium. So if they had the policy for 6 months when Southern Fidelity went bankrupt, then they got their other 6 months back, less $100 fee. Companies are here in this state that do not participate in our guarantee association. Be very cautious if that happens and you see the list, and it's probably not complete up until today. But you will be refunded nothing. Your mortgage company will be wondering where you're going to come up with the money to pay a new insurance company, and your escrow is going to be extremely upside down. So be cautious, do your little homework before you buy a policy. Make sure that the company is going to be there when you need them, and also that they do participate in the Guarantee Association so you don't lose money or that your company, your mortgage company, or you have already paid in. So there's a lot of companies too that have just simply left the state of South Carolina. They're just pulling away from the coast. Currently, Nationwide is non-renewing clients, as well as Aegis. Aegis was a big mobile home insurer, and they did some regular homeowners as well. But they are both non-renewing clients now, which is better than going insolvent. They're at least giving you a chance to go find coverage elsewhere, and you can finish out your policy term without loss. But the market's very hard right now, and I think this, I don't know for a fact, I've just heard Allstate's not writing new policies on the coast here. State Farm has been very, very picky about what they write on the coast here. This is just affecting everyone. When companies like these most of these are smaller companies with the exception of Southern Fidelity, they come in and they have a really good price. They're what we call buying business. If you got a new house, 10 years old or less or whatever, roof's good, they'll offer you a $1,200 rate. Some of the ones we saw. You have a storm, you can't maintain that. They can't pay their claim. So they either go insolvent or they leave. So do a little homework on the company. You want an A-rated carrier through AM Best is our rating outfit for insurance. And anything that's a C or less, your mortgage company won't accept. So be sure you're getting a good solid company that has the financial means to survive a storm. And then my last point I want to touch on was flood insurance. There's been a lot of changes this is administered by FEMA, sold by your company, but the policy is actually owned by the government. And so there's been some changes, some remapping here. A lot of places that were in flood zones aren't, and a lot of places that aren't now are. Again, it's something to get with your insurance agent about, sit down, let them do a quick quote, find out if you're in a flood zone or not. If you don't have a mortgage, you're not going to know. If you have a mortgage, your mortgage company's going to tell you initially hey, you're in a flood zone, you need to purchase flood insurance. But 40% of the national flood insurance claims come from places that aren't in flood zones. We had the 1,000-year flood. What was that, Ronnie? 2015, and we had places that were in the X zone, or as layman's terms, not in the flood zone, that flooded. They got $39,000 as the max you can get when you don't have a policy. So not real good if you had $100,000 worth of damage to your home, again, under insurance. So National Flood Insurance Program will offer $250,000 for your home, $100,000 for your contents, and $500,000 if it's a commercial property and commercial property or commercial contents. But usually $250,000, $500,000 that satisfies your mortgage company. And unless you're on the immediate coast, like at the beach, you're probably not going to have over $250,000 damage from a flood. If it enters your first floor, it's not going to cost $250,000 worth of damage. You have to jerk out the sheetrock and replace it and dry it, and your furniture is covered separately up to $100,000. So usually that's good enough, and that's why the mortgage companies are okay with that. There are some companies out there selling excess flood insurance now. So if you did want to insure the home for the full amount, on the beach, if you got a beach house, say Folly or Isle of Palms, I definitely would explore the excess flood coverage so that you did lose the whole home to a surge, then you'd have the coverage to replace it.
It's great insight, Tim. And sometimes people, even that are in an flood zone, people will often at times ask me, and other real estate professionals as well, is this home in a flood zone? And just for clarification purposes, FEMA has everything classified as some level of a flood zone. So an X does not require you to have flood insurance. So it would be a misconception. It would be a mistake for me to say, well, it's not in a flood zone, right? It is flood zone X, which doesn't require you to have flood insurance coverage. However, you have the option to still get it. And it's traditionally a very minimal cost, especially if you're in an X flood zone. So I'm not saying that it's the right thing to put on every property, but it's something to consider. Maybe get a quote. Knowledge is powerful. So at least have it as a consideration. And then for some that are moving to our low country area, they say, well, we want to have a home that's not in a flood zone that requires flood insurance. And that's a little bit of a misconception as well, because not every flood zone, if you're in an AE, for instance, it could be a minimal risk. And with the right kind of policy in place, you could be fully covered and not expose yourself to a high risk level. So I don't want people to necessarily rule out every single flood zone just because they're moving to the low country. Listen, you've got a lot of risk in daily life of other things happening as well, with fire and hail and storms and other things that, you're exposed to a lot of risk. You just want to ultimately make sure that you're insured if that risk were to happen. So I don't want flood insurance to be such a negative that it keeps people out of certain homes or neighborhoods. There is a level of protection offered. So we just have to make sure that that's why we partner with somebody that knows what they're doing at a high level and employs other people that work for the company that also will take the time to educate, because it really is a powerful thing when you understand what you're buying. And so, all right. Well, any other points?
One more thing there, Roni, is it's very important for what you're talking about. When you buy a home in a flood zone, that doesn't automatically mean you're going to have an extremely high flood premium. When you buy a home in a flood zone, there's something called an elevation certificate that's usually done when the home is built, and certainly when the first flood insurance policy is bought. So if let's say the base flood elevation is 11 feet, that doesn't mean anything to you. You're just using numbers.
Okay.
If the home's first floor, in other words, where you enter the home, is 4 or 5 feet higher than 11-foot flood elevation, base flood, your rate's going to be about the same as someone that's not in a flood zone. Where people run into problems is older homes that weren't elevated, and they buy them in a flood zone, and they're actually at the base flood elevation or below, and then you can have some exorbitant flood costs. So
yes, well, that's a great
area,
point.
Austin area, most of these homes that are newer, I'm saying newer since the 90s, are elevated. They're on a crawl space, and base flood elevations have been around a long time, and most builders know that house needs to be above that by a certain number of feet. So don't let flood scare you off, and don't let being in an X zone keep you from buying flood insurance. I'll give one quick example. I had a client and they had flower beds put in at their house. Well, the guy who did them sloped them the wrong way. So when it rained, water went into the home from the flower bed. Well, that's a water rise from ground level. That's a flood claim. Fortunately, this client had flood insurance because he lived on a lake, but it was covered. Had he not, that claim would not be covered. So just because you're not on the immediate beach does not mean you won't have some sort of flood claim.
Yep. Very good points to make. Did you have anything else further to share with us?
No, not really. I think that education is key, and what I've prided myself on for 25 years, and I teach my agents and customer service representatives, is to please educate clients. When they make informed decisions, they have peace of mind. We sell peace of mind. We're transferring the risk from you to us. That's all insurance is. So be educated, talk with your agent, and have those conversations about the value of the home. What are my deductibles? Do I need flood insurance? All these things we've discussed today can save you a lot of headache and a lot of money down the road.
It's a great point. It's a really good point. We can have a whole nother conversation, and maybe we will, at a later date about, different kind of insurance policies to have on different, I've got an umbrella policy. There's HO6 policies on personal on residences. There's HO9 policy. There's all these terminologies that lie in the insurance industry. And so maybe we'll do a round 2 if you'll come back, and we can just talk about different types of insurances that are available out there, different terms that people have heard, and making sure that people understand insurance as a whole. So I think that we'll reserve that, but this has been 5 key must knows for homeowners insurance in the Low Country. Tim, thanks again. If you want to put our contact information up there, I think you've got one more screen that has our information on it still. I can be reached on my cell phone or text, and of course my email address, and then Tim Cardwell at Farm Bureau Insurance. His contact information is there as well, and I can speak for both of us. We will expedite a response either from ourselves or from our team. If you reach out to us, we'd be more than honored to help. If you're either already living here in South Carolina, or if you're moving to our area, we welcome you with open arms, and we want to make sure that you not only love where you live, but you're fully insured and at low risk with that investment. All right, Tim, thanks again so much. I appreciate you today.
Thank you, Roni. Folks, Roni Haskell is my realtor and my friend.
Thank you.
I don't know anyone more knowledgeable in this area in real estate. Please reach out to her if you're considering a home in our area.
Thank you. Thank you. I appreciate that. All right. Well, let's go get them. I appreciate you, Tim. Bye.
Thank you. Bye.